Hi, this is Mitch Milat with Riviera Financial Mortgage in Beverly Hills. Another day in the mortgage business. I want to let you know that I really appreciate you letting me assist you in getting the best mortgage financing for your home purchase or refinance. Also want to let you know that I keep an eye on the market and developments, and I'm always trying to keep you in front position so that you're ready to take advantage of any opportunity or have the best solutions to any problems that might arise. So with that in mind, I put this little informational message together. Please just take a moment to watch it. Let me know what you think, and let me know if you have any questions that I can help you with. Thank you so much.
Underwriting is a crucial component of the mortgage process that dictates whether or not you will get the final loan approval. In this video, we're going to share what happens when your home loan is underwritten. Let's dive in and learn more about underwriting and how it works. Underwriting is the process by which your lender verifies your income, assets, debt, and property details in order to issue final approval on your loan application. Underwriting happens behind the scenes. Your lender might ask for additional documents and answers such as where bank deposits came from, or ask you to provide proof of additional assets. So what does an underwriter do? A mortgage underwriter takes a look at your finances and assesses how much of a risk a lender will take on it if they decide to give you a loan. The underwriter helps the mortgage lender decide whether or not you'll get approval on your loan. The underwriter will ensure that you don't close on a mortgage that you can't afford. If you don't qualify, the mortgage underwriter can deny your loan. So how long does underwriting take? Your mortgage can be just as unique as your financial situation, so the exact amount of time underwriting takes will vary on a case-by-case basis. The sooner you get all of the necessary documentation to your loan originator, the sooner your loan can be underwritten. So it's important to get all requested documentation to the lender in a timely manner. What makes up the mortgage underwriting process? The underwriter evaluates your finances and past credit decisions. During the underwriting process, your underwriter looks at 4 key areas that give them a more complete picture of you. The first is income. Your underwriter needs to know that you have enough income to cover your mortgage payments each and every month. To prove this, you will need to provide 3 types of documents to verify your income: your W-2s from the last 2 years, your 2 most recent bank statements, and your 2 most recent pay stubs. Are you self-employed, or do you own a sizable share in a business? If you do, you'll need to furnish a few different documents in lieu of your W-2s. These include your profit and loss sheets, K-1s, balance sheets, and your personal and business tax returns. Your underwriter will also check that your income matches the income you report and verify your employment situation with your employer. Next, they'll look at your appraisal. Appraisals are almost always required when you purchase a home. They provide protection for both you and your lender because they ensure you only borrow what the home is actually worth. An appraiser will inspect the property and walk through the home to take pictures and measurements in order to evaluate the condition and features of the home. The appraiser compares similar properties by looking for homes that are similar in location, size, and features. These comps, as they're called, need to have sold within the past 6 months and be within a mile of the property unless you live in a rural area. Your underwriter will also look at your credit. Your credit score shows the underwriter how responsible you are when you pay back debt. A good credit score shows that you pay back your debts on time and can also help you qualify for a lower interest rate. The minimum credit score you'll need to have depends on what type of loan you are applying for. The underwriter looks at your income, what you owe, and what you want to borrow to determine your debt-to-income ratio, or DTI. Your DTI is the total amount of money you spend on bills and expenses each month, divided by your monthly gross, which is your pre-tax income. Lenders prefer to see a DTI ratio at or below 50%. Next, the underwriter will look at your assets, and it can help you get a mortgage approval because they can be sold for cash if you default on your payments. An underwriter might view your checking and savings accounts, real estates, stocks, and personal property. The bottom line is, underwriting simply means that your lender verifies your income, assets, debt and property details in order to issue final approval for your loan. An underwriter is a financial expert who takes a look at your finances and assesses how much risk a lender will take on if they decide to give you a loan. Throughout the underwriting process, it's a good idea to actively respond to your lender's requests. Don't apply for any new credit lines during underwriting and respond to inquiries as quickly as possible. Also, be upfront and honest about your finances, or this will cause delays in the loan application process. And of course, remember, your loan originator is here to help you along the way.
Thank you for watching my video. I hope you found it helpful, and I hope you would like to discuss it further. So if you would, please feel free to call me, Mitch Milat, Riviera Financial Mortgage, 424-290-8294. You can also email me, mitch@rivierafinancial.com. You can also find me on Instagram at Mitchell Milat, or on my Facebook homepage, Mitch Milat, Riviera Financial, Beverly Hills. Thank you so much. Look forward to talking to you soon and wishing you much success in the future.